Hello and welcome back to Live from Paris. I'm joined now by William Edwards with the Business News. Hello, William.
Hi, Laura.
Right, so we're going to kick off by looking at the European market, see how they're opening up this Friday.
Yes, and things are pretty much flat at the moment at opening time, just about positive figures, but financial spread betting services are reckoning that we will see further gains throughout the day, because actually it's been a pretty positive story on the markets in Asia and the US in the previous couple of sessions. So if we go over to Asia, we can see that things closed up there as well. And what's really been driving the market has been the European Central Bank's 500 billion euros of cheap loans earlier this week that it said it was going to give out to the banks, and that has really shored things up. Also some positive figures on US jobs again this week, so that has seen some optimism.
Okay, well, as you said, the market's broadly positive, but that doesn't mean that the longer-term problems facing the European Union have disappeared magically.
Certainly not, and they are being looked into at a summit in Brussels, where Greece, for the first time in a long time, is not at the top of the agenda. In fact, top of this agenda today is jobs, and unemployment is continuing to rise across the Eurozone. New figures out yesterday showed it was up to 10.7%. But of course, there's very little new money to help out with all of this, and austerity measures are cutting in across the continent. So let's take a look at what the politicians are hoping to do.
European leaders meet in Brussels looking for ways to boost growth. And there's a lot of work to do. Data out Thursday showed unemployment at a record high in January across the 17-nation Eurozone, reaching 10.7%. Though joblessness is on the decline in Germany, it's peaked to over 23% in Spain, where one young person in two is out of work. Unemployment is also at staggering rates in Greece at nearly 20%. Austerity measures have been seen as a much-needed medicine for nations struggling under soaring levels of debt. Many EU leaders are expected to continue the charge towards greater cutbacks Friday by signing a treaty that enforces further deficit slashing. But anti-austerity sentiment is also growing.
La Commission européenne
The European Commission is predicting negative growth for the European Union in 2012, with catastrophic figures for countries like Greece, Portugal, Spain and Italy. And so more and more people are starting to say we need to end these austerity programs and instead come up with stimulus programs.
Meanwhile, a return to health in Europe is still far away. Greece is facing its fifth year of recession as it strains under cuts required to receive much-needed bailout loans. Even Germany and France, the region's strongest economies, are barely growing. And the Eurozone is expected to slide into a mild recession in the first half of this year.
But unemployment then will not the only thing on the agenda in Brussels this Friday.
No, firstly, what we're expecting to see is a signing of this fiscal pact, which was agreed at the end of last year. You might remember just before Christmas, certainly in the UK press, there was quite a kerfuffle over the fact that David Cameron didn't sign the UK up to this deal, which basically will see balanced budgets made almost a legal requirement for EU members. This won't include the UK, as we've just made mention of, and also the Czech Republic won't be taking part. But this will be signed by the rest of the 25 EU nations today. And we can see those pictures from Brussels at the moment, but it won't go into law just yet. There are going to be, in some countries, a referenda on this, including Ireland, which crucially has rejected 2 EU treaties in the past, so it could be a long and rocky road till that goes into effect.
Okay, and as you mentioned earlier, Greece not entirely off the agenda, even if it's not at the top of it this Friday.
That's right. Finance ministers have signed off now on half of the bailout money that is going to go to the country, but the other half has been put off another week. They've demanded more assurances that Greece is going to stick to what it's promised to do, and also they're waiting for private investors to go ahead with their plan to forgive basically part of what they're owed to Greece. That's expected to happen by next Friday. Fingers crossed.
Okay. Well, meanwhile, the EU are talking about growth, but over the channel, the UK is focusing on boosting its manufacturing and what it calls the real economy, even though that's not going quite so well.
Well, yeah, I mean, it's a story of what's happening across Europe, really. I mean, but there's been a couple of bits of bad news in the last 24 hours or so. Firstly, of course, Vauxhall, we've been talking about General Motors having problems in Europe. A major factory in the UK could face closure. And Business Secretary Vince Cable has flown over to New York to have talks with with General Motors executives to try and persuade them to keep the Ellesmere port factory open. 2,800 jobs at stake. Basically, there is very little demand at the moment for cars in Europe, or it's considerably lower than it was at peak times before the financial crisis, so that has really hit their output. And meanwhile, defence contractor BAE Systems, they're going ahead with cutting 2,000 jobs in the north of England, and they say that's due to a downturn in international defence spending. So we're seeing not only the private sector, private consumers dropping their spending on big-ticket items such as cars, but also governments, the fact that they're not spending quite so much, that's also hitting businesses. So a double whammy, and it's a story that's being seen throughout the Eurozone.
OK, well, as we've seen, one of the biggest problems facing Europe is a lack of jobs, causing high unemployment across the continent. But meanwhile, in parts of China, the problem is finding enough applicants to fill the vacant positions as the allure of moving to the big cities begins to fade. Here's Siobhan Silk with more details.
Crowds of young people attend a job fair in Beijing. But it's the employers, not the applicants, who are desperate to ensure vacancies are filled.
The problem now is that companies struggle to find staff, and this difficulty has been reported in many places across the country.
The problem is most acute in China's prosperous east, which relies heavily on migrant workers and graduates coming from the less developed inland areas. But with spiralling living costs in Shanghai and Beijing, the marginally higher wages in the big cities are not the attraction they once were.
Since living costs, including food, accommodation and travel, have recently increased in big cities such as Beijing, some people who'd planned to find jobs in these cities have decided to leave.
A recent arrival to Beijing from his home in one of the country's poorest provinces, graduate Wang Lei has already found a €350 a month sales job. But he hasn't stopped looking for something better.
Beijing has many job fairs and the bigger cities have more opportunities, and that's why I came here to look. But I still haven't found the perfect job.
Chinese leaders are concerned that a labour shortage could put the brakes on growth in key cities. Balancing the financial constraints of employers with the expectations of an aspiring youth will be a major challenge for policymakers.
And finally, William, we're going to move back here in Europe because we're going to be looking at a company that's just reported a profit for the first time in 26 years. That's quite an impressive span of time. Eurotunnel, how have they stayed in the red for so long?
Yeah, if I was setting up a business, I certainly wouldn't be hoping for results like that. But of course, Eurotunnel did have to shoulder a lot of the burdens, a lot of the costs of building the undersea tunnel that links the UK to France. It's got a lot of debt, €3 billion, and these costs of construction have weighed it down over the years. But it's finally marked a milestone. 2011 saw an €11 million profit. It has reported profits before, but these were always wiped out by exceptional charges or other costs like that. So it's seen a good year. It's expecting a bumper 2012 as well, with the Olympics, of course, in the UK and the Queen's Diamond Jubilee.
Oh, they can thank Her Majesty for getting back in the black. Thank you very much indeed, William, for that look at today's business news. And that's just about all from us for now. Thanks for joining us. And don't go away because Louise Hanna will be here in just a few moments with more headlines right after the international weather next.